You are the president of one of the leading stock exchanges in North America. What is going to happen to crypto?
So this is a great question. We've obviously been thinking a lot about what our position is, in working with the I'll call it digital assets community.
Hey everyone, welcome to the Trade to Black podcast. I'm your host, Shad Dales. Let's get right into it this week. Before we begin with the podcast, all views on the Trade to Black podcast, the guests on this podcast are purely opinion. You should not treat any opinions expressed by us or guests as investment advice. And the views on this podcast are solely to be intended to be informational and are not investment advice. Okay, let's go. Let's welcome in. He is the president of the Canadian Securities Exchange, the CSE, Richard Carlton, back to the podcast. Good day, sir. How are things?
Things are good, Shad and Ben. Looking forward to a nice chat.
Yeah, let's have a nice chat. Ben, good to see you. How are things?
Things are great. Safe banking's in the cards, potentially. A lot of exciting times coming up at the end of the year.
All right. So, Richard, saw you 2 weeks ago at MJ Biz in Las Vegas. How'd you like the breakfast at the Trump Hotel when you stayed there for a couple of days?
Well, thanks for outing me on taking the $20 name discount on staying at that unnamed hotel. I will say that it was calm being slightly off the strip and not having a casino. Because I believe the owner was unable to secure a casino license from the authorities in Nevada.
Yeah.
But it actually turned out to be quite a decent place to stay.
Yeah. Well, Vegas was alive and well. A little chilly to say the least. But Cannabis, MJ Biz, was front and center. Interesting times to say the least. A lot of conversation regarding safe banking legislation. They continue to be hot topics. Some of the predictions going into 2023 are the road to growth will face near-term headwinds due to supply, pricing, and regulatory changes, but long-term things remain strong from a lot of people's perspective. So when you look at the 3 or 4 days that you were there, what was the big takeaway for you?
Well, the big takeaway was, again, it was immense. It's grown again, I don't know, 20, 30% from the last couple of years.
Yeah.
And so with that many vendors supporting the industry who are obviously investing considerable resources to be there, suggests to me that the industry is in fact very much alive and well and growing in many respects. I'm not sure what the attendance numbers were in the end. I heard 45 or 50,000. We always measure it against the PDAC experience. For those of us in the Canadian mining space, it's certainly far outstripped PDAC in terms of its size and impact on the venue for sure.
Well, there was the Cannabis, which was all about investing, which was incredible with all the people that spoke. I wrapped up there around 4 p.m, went over to the convention center where all the fun was going on, and I think I was stoned after walking into the actual entrance of all the people just hanging out and socializing. It was so much secondhand.
It genuinely looked like when you approached, by cab or Uber, like there was a bonfire at the entrance. There was so much smoke in the air. It was just true.
Yeah. Ben, one of the things I wanted to touch on with you is like I know you've been following closely just about a lot of the announcements and the legislation, lame duck session, Safe Banking Plus, and I know there's a few things that you wanted to touch on here today and some of the questions that you wanted to ask Richard. But what are you hearing and seeing right now with some of the feedback on the social channels about some of the news that's happening out of Washington?
Yeah, well, what I'm perceiving is right now it's 100% about safe banking. The industry is actually pretty quiet right now. We just went through earnings season in November, and those earnings weren't particularly exciting. They're mostly flat, in line, what people expected. Obviously, there's some price compression that kept some of the numbers in line because some of the guidance had already been revised lower, and most of the companies are meeting those numbers. So right now we're out of that quiet period, or out of that post-earnings period, and it's all about safe. There's about, I believe, 14 legislative congressional sessions left in the lame duck before the new Congress sits in beginning of January. So this is an important time, because if it doesn't come now, I think what you're going to see is the new Congress will come in, and other legislative priorities may take place. So this is the big shot on goal now for cannabis investors for cannabis reform, because then it might get shuttled, potentially to the summer or next fall if we don't get something now. So it's all about the focus is all about safe banking.
That's the safe prediction. They may, of course, they'll may. But Richard, what do you think happens if this doesn't pass during lame duck session? Will the new Congress come in, and do you think you'll see any movement?
Well, from what I'm hearing from various sources that we work with from time to time, is that as Ben mentioned, the Democrats are going to take basically one final push during the lame duck session to see if they can get a form of safe banking through. My sense is, again, just based on secondhand, but I believe credible information, is that the Republicans are unlikely to do any favors to the Democrats during the lame duck session.
Yeah.
And my suspicion is that any attempt is unlikely to be successful during lame duck. Now, I have heard, though, all is not lost, I guess, that the Republicans may actually surprise the marketplace by, in fact, with the new Congress, support a thin safe. So basically,
what does that mean? Yeah, go ahead.
Very much focused on access to banking and payments, but without the social equity provisions that the Democrats have been trying to implement alongside the banking arrangements. Similarly, I think sufficient air cover for the national securities exchanges in the United States and possibly Canada to list the securities of these companies is also unlikely to be included in that legislation. Really, what they're focused on is the public safety issue of having these folks that are going, basically taking hundreds of thousands of dollars in cash from the dispensary on Friday to the local credit union where they bank.
Yeah.
And being robbed, having their families held hostage. I mean, there's a significant public safety issue associated.
I don't think enough people understand that either.
Yeah, and again, I mean, it's not like these people are being paid to risk their lives in order to bank.
Yeah.
I mean, it's crazy. But has been happening with increasing frequency in different markets in the United States. And I think there's a lot of, there is definitely sympathy publicly, but I think that's also translated into the political sphere as well. And again, a very narrow version of legislation based on the original SAFE bill may get introduced sooner than people think.
Okay.
Now,
okay. Ben, you wanted to ask something?
Yeah. Now, Richard, you mentioned that safe banking, if it comes, it may not include provisions for listing on a different exchange or a U.S. exchange. But we've seen recently some cannabis companies listed in Canada have gotten creative. For example, to be able to go on the U.S. market a little bit sooner. For example, Acreage Holdings with Canopy Growth and Canopy USA LLC, they announced a floating share agreement in October to sort of get around the rules and be able to list potentially on the TSX or NASDAQ. Are you seeing any companies on, or hearing about any companies on the CSE trying to maneuver and get into the U.S. a little bit earlier than possible, since federal legalization probably won't happen for a long time still?
Yeah, I think every management team is looking at all of the options to increase the asset valuation and the liquidity of their stock. That's just basic table stakes at the best of times. But with this extremely complicated proposal from the folks at Canopy, other management teams are looking at, is this something that, we could potentially do? Now, there are a few things that people should keep in mind. The first one is NASDAQ has said no to the Canopy proposal out of the gate. They are attempting to convince NASDAQ otherwise, but if you read the disclosure materials, it's very clear. NASDAQ said that the transaction is not acceptable and does not meet the listing standards for the exchange, which, and again, in the disclosure materials, raises the very realistic possibility that they will delist from the United States. Then the question is, will they satisfy the the folks at the TSX, where Canopy is currently listed. John McKenzie is on record as saying yes. It looks like we're prepared to go along with the accounting treatment that apparently caused grief for the folks at NASDAQ, which means that the likelihood is that again, until or unless things change, that they'll lose their NASDAQ listing, and that Canopy will continue to be listed on the TSX. So really no change.
Interesting.
What they will have are assets in the plant touching assets in the United States under the umbrella of that particular company. Now, as I say, 100% sure that all of the multi-state operators that are listed on the Canadian Securities Exchange are looking at that transaction. Again, our intelligence is that the Canopy situation is unique, and that similar structure used by many or maybe all of the MSOs would result in some pretty aggressive tax consequences for the founders in particular. And the other thing is, and again, I hope, or at least this will probably open a whole other can of worms. I'm not actually sure it's going to, in fact, achieve the results that are hoped for.
That's the thing I like. Let's face it, from what I'm seeing, there's a lot of promotion going on, cheerleaders to get this passed. And I think a lot of investors are, to the point where they're like, let's just get safe banking passed. Let's get listed on some of these other exchanges. But further to that, if that were to happen, what do you think are some of the things that maybe investors are unaware of that are maybe looking at it the wrong way? Because I've had conversations like this where, yeah, great, safe banking will pass, but if then the infrastructure that's going to be required to make this all come together and work is a long, drawn-out process. So what are investors not understanding?
Well, I guess there's a couple of points you've raised there, Shed. The first one is, and again, in the interest of full, true, and plain disclosure, I am a member of the board of directors of Safe Harbor Financial, which is a NASDAQ-listed financial institution which banks the cannabis industry.
Okay.
And so it is a company which has been in operation for close to 10 years at this point, based in Colorado, as you would expect. And they have worked extremely closely with state regulators across the United States, as well as with the Treasury Department, to ensure that, and basically in many cases, to develop the compliance procedures required to ensure that for example, they're not being used as money laundering.
Right. Okay.
To also provide state regulators with line of sight into the point of sale. Because as a cash business, you have real problems, obviously, with not having the same sort of audit trail as you do if credit card or debit cards are the principal means of payment. So the company, in fact, the CEO, Sunday Seafried, has written the book on how to do this. And the fact of the matter is that safe banking goes through, and sure, Bank of America, Wells Fargo, and a number of the retail banks in the United States will certainly look at opening up into the cannabis industry. But as you say, there's a lot of work and a lot of processes and procedures and so on that they need to implement in order to meet the requirements both of the state regulators as well as the folks at the federal level. And I think the likelihood is that they're more likely going to need to partner with some of the folks who have been in the game for a number of years at this point. But to your point, this isn't a case of somebody snapping their fingers and next thing you know, boom, you can go down to the corner and open a Wells Fargo account for your cannabis business.
Yeah.
That just simply isn't going to be the case. Now, you're absolutely right. If when the day arrives, there's going to be a massive, I think, uptick in the both volume and price
I agree.
for the plant-touching U.S. cannabis companies. I mean, look, we saw Mr. Biden thankfully speak during market hours. I think it was about 2 o'clock when he provided his remarks about looking at descheduling cannabis, improving access for medical researchers to the plant, as well as pardons for folks within the District of Columbia. That had our index up in the course of 2 hours by 36%. Almost all of it, of
36.
course, driven by the U.S. cannabis companies.
So then what happens long term? Like, is this another chapter in cannabis where it's just like we get these announcements and people get excited, there's euphoria, only to see it retract again because of the long-term infrastructure that needs to be built?
Well, it didn't. I mean, we haven't given up that 36%. Maybe
True.
about half of it. But no, I mean, I think it has given people a much more positive view of the industry as a whole. But shifting gears for a second, Shad and Ben, thinking about whether they list in the United States or list on other exchanges in Canada or internationally, again, one of the challenges that the companies have is it's almost entirely retail shareholding.
Mm-hmm.
Companies, right? About 97% of the shares are held in retail accounts. And most of, in fact, I'm not aware of a broker who permits trading to take place on a margin basis for these names. So these are all fully paid accounts.
Yeah.
So that all by itself is going to have a negative impact on liquidity.
Okay, so
right? Because it's more expensive to trade.
So you bring up a good point, Richard. I want to touch on this because there's a big perception that if safe banking were to occur and there was a relist of some of these companies to say the TSX or whatever, there's still going to be potentially the landmine of U.S. custody, right? Because of lack of federal legalization. So there's a perception that this will create, cure all ills, and some of these stocks will go up to their true valuations. They might rise three or four times, but that really is not necessarily the case, is it? Because at the heart of it, it's a liquidity issue caused by custody issues from U.S. brokers, is it not?
Well, that's a big one. It's not just that. But yeah, I mean, I'll step into that deep inside baseball that people don't really grasp. But basically, every institutional investor, family office, hedge fund has a so-called securities custodian, right? So somebody who actually keeps, if you want to think about it, now most of them, of course, are bits and bytes. But back in the old days, there was literally a vault with a bunch of paper share certificates in it, right? And they would administer those positions on behalf of their clients, but they had these actual physical stock certificates for safekeeping. Now, what has happened over the last few years is that the custodians who service the U.S. institutional family office and hedge fund community have been told by federal regulators in the U.S. to stop providing those services for plant-touching cannabis companies. So if you had a institutional investor who happened to hold, say, picking some names out of a hat, Cresco, Curaleaf, Trulieve, GTI, and so on, the custodian wrote letters, mostly earlier this year and late last year, to their clients saying, we're sorry, but we've got to give you these certificates and you're going to have to find a different custody arrangement. Mm-hmm. They also said what we will do is if you want to sell these shares, we'll do that for you or look after the mechanics of that, but we will not actually process any new purchase transactions. So what that means is the cannabis company, when you're pitching an institutional investor, say, look, we don't want to have 97% of our shares held by retail. We want to have a much healthier balance, in terms of our shareholding. The institutional investor has to really, really, really love that stock because they will have to provide or set up a specific custody arrangement. There are a few people that are still doing it in the United States. Some of them Canadian financial institutions with operations and appropriate regulatory cover in the United States. But they're kind of special. They're one-offs. And of course, your fees are generally speaking based on the value of the assets that you have in custody. So the marginal rate, if you're setting something up for a specific position you're taking on, is pretty expensive. So as I say, you would have to really, really, really like that stock in order to trade it. But there are some other constraints. So for example, one of the things is that the disruptor brokers, the Robinhoods, Webull's, Tasty Trades, and so on, they don't let their customers, and it's partly because of the result of the custody issues, but they don't let their customers trade the U.S. cannabis stocks over the counter in the United States or on the CSE. So you would think that that demographic is perfectly aligned with the retail cannabis investor,
Yeah.
but they can't trade. They can't trade those names. So that's a concern. And of
I did
course,
not know that. I did not know that.
yeah. So I mean, we're working with them to see if what we can do to get over the hump.
Yeah.
Um, and there are a number of other things. So, for example, there are no options currently listed for these names in Canada, or more importantly, in the United States, where retail activity is a significant part of the liquidity and daily turnover. Um, there are, just a ton of other barriers, obviously, for the institutions. So that even if they were to, say, leave the CSE and move to another exchange, you're still not solving, the challenges that, in particular, institutional investors, but also a big body of retail investors have in owning and trading the stock.
Hmm. Lots to obviously take in there, but one thing's for sure: this industry is so confusing in the back end that people are so unaware of, even myself. A lot of change happens, but the only thing that doesn't change is me following you around to parties in Vegas at MJ Biz, right, Richard?
Yeah. Well, it's not necessarily you're following me, but I'm following my guys who are you know what I mean. So yeah, they do tend to look after us quite well, though.
But
So
I think that's important information to know and obviously understand. It's like you got to look beyond just the headlines and how this all plays out over the course of the year. Another fascinating stat is that 9 out of the 10 top brands in the U.S. are actually owned by MSOs. Some of the smaller companies have, I think, better product, but you're going to see a lot of consolidation and attrition that's going to happen. How much do you see a lot of like mergers and acquisitions happening in the year 2023 pertaining to the industry?
it's got to happen, and in particular, given the difficulty in accessing the public markets generally, whether it's in Canada, the United States, or elsewhere. Means that only the strong will survive.
Yeah.
I think the other thing, Shad, that people need to think about when they're looking at the sector is understand where each one of these companies is like, what part of the value chain are they dominating, or are they getting the majority of their revenue, right? So that we know that, for example, and have seen coming for a while, cultivation is certainly a difficult area because there appears to be a glut in many markets in Canada and at the individual state level in the United States. So if that's a significant revenue driver for you, that's obviously going to be a significant challenge
Yeah.
for those management teams. But again, this is no surprise. We've been saying for years, show me an industry where the farmers make the money. It is almost always about consumer brand being where the real value lies. And so again, no surprise that the MSOs have focused the majority of their attention and effort on developing those brands, which is why, exactly to your point, that
Like cultivation is an afterthought. It's all about wholesale for them right now.
yeah, oh no, absolutely. So as I say, if you're able to build those brands, the consumer loyalty, and ideally, of course, have some spillover into Canada where you can't really market or advertise or do any of the things that you need to do. But that is, as I say, why you see so much focus and attention from the MSOs on that particular part of the value chain.
Now, Richard, I wanted to shift gears here to maybe some of the mining companies out there, because I know the CSE, most of your listings are actually mining companies of various sorts, base metals, precious metals. I want to get your take on what you're seeing right now. It's been, a tough past couple quarters for some of these, base metals prices. They've been coming off, but things look to be perking up again. Where are you seeing listings in 2023, and just overall, which markets do you think are going to excel in 2023? Like, is lithium going to continue? Are the base metals going to do well? What's your take on that?
I think the big thing is that if we hit bottom, are we going up from here? Or are we going to see more bottom? Not even the industry, but the market as a whole.
Well, let me, I guess I'll take those in order, Shad, if I can. Ben, as you say, the driver for new listings on the CSE, the latter part of last year and certainly this year, has been the mining space, which is in fact, of course, the traditional roots of Canadian early stage public venture capital. But it's a little different this time in that instead of simply being focused on precious metals exploration, it's a very, very broad-based portfolio of different metals: nickel, copper, zinc, cobalt, the rare earths, and as you mentioned, lithium and graphite. So clearly we're talking about the electrification of the economy thesis here, as well as the comparative lack of investment in productive capacity for those base metals over the last 30, 40, 50 years in Canada, the United States, and other places. So I think we all understood coming out of COVID that companies manufacturers in particular, were looking to shorten supply chains, and that relying on, I guess what's the phrase, politically stable jurisdictions made more sense. And the truth of the matter is that we are looking at a lot of the exploration companies for these base metals they're basically advancing projects that may have been drilled in the 1970s, 1980s. And so it's not a real shot in the dark. In fact, there's an overwhelming likelihood that there is a commercial ore body associated with these projects. So the likelihood of these projects becoming producing mines in a 3 to 5 year time horizon is in fact much higher than it is for your typical early gold exploration play. So there's that. But the other thing is, again, when you talk about the price of these metals, again, remember they're all denominated in U.S. dollars.
Yeah.
And if you're looking at the macro picture, the performance of the U.S. dollar against all of the other significant currencies in the world has been, I mean, amazing. How much higher it is. We saw it get to parity with the euro and the pound basically a couple of months ago. So if you look at the charts, whether it's gold, nickel, silver, palladium, cobalt, denominated in euro, in sterling, in Canadian dollars, in Japanese yen, in RMB, in rupees, the charts go like straight to the roof.
Yeah.
Right? It's only in US dollar terms that you see it's like, okay, well, it's relatively flat. Why aren't these things behaving themselves? Like gold in particular, people are scratching their heads and going, what the heck?
Yeah.
Well, the reality is, again, everywhere else in the world, if you're denominating in the local currency, it's done exactly what it's supposed to do.
Yeah.
Good point.
What we've seen is that, again, for better or for worse, and I'm not nearly smart enough to figure out the implications of this, but U.S. paper has become basically the new gold, if you will. Mm-hmm.
So, to my point, where do you think we are heading into 2023? Are we at the bottom? Let's hope we are.
Well, I guess the concern as always is are the central bankers overshooting in raising interest rates? Again, I'm not an economist by profession by any stretch of the imagination. I'm just a modest little litigation lawyer who happened to stumble into the financial services world some years back.
Yeah.
But my sense is that they probably
so modest.
They probably have overshot, and in fact, the economic pain, whether it's in the form of unemployment, slowing growth, will probably be more severe than what the folks in Ottawa and Washington are projecting. At the same time, we certainly see anytime there's a hint of good news, the markets come roaring back. Mm-hmm. So we know there's an awful lot of cash on the sidelines that are prepared to fuel, whether it's a short-term bull market or long-term secular bull, whatever you want to call it. But there's still a lot of dry powder on the sidelines.
Yeah. That's an interesting point, Richard, because when you look at the S&P 500, recently it was, 40, 50. It was only about, I don't know, 10% off the high. The Dow was only 8% off the high. So really, considering how bad economic conditions have been, and we're in technical recession in the U.S. 2 straight quarters, even if the Biden administration doesn't want to admit it, a lot of money does rush to the sidelines with any sort of hint that inflation's has peaked or whatever. But the reality remains that interest rates are very high still, and that the economic pain hasn't really begun, right? So that would suggest that perhaps we could have a tough, at least start to 2023, does it not?
Yeah, and again, I the speech that I deliver on the inflation thing is that's a lazy way of describing what's going on, right? Because yeah, there is some classic inflation, in some asset classes, but for the most part, what we're dealing with is a demand-driven price increase, right? I mean, there's a reason the price of oil's gone up, and it's not because there's too much money flooding the system and there's more demand for it. The reason is that you've taken a huge amount of energy production out of the legal market, and with the same number of people demanding the commodity, right?
Right.
Well, guess what? The price is going to go up. Full stop. And similar sorts of things in, again, a lot of the input commodities for manufacturing. So yeah, is nickel, copper, all of these things more expensive than it was 2 years ago? Yes, they are. Is it because there's a supply issue that was caused by? No, it's demand. It's demand that's causing the price increase. Well, that's not inflation.
Yeah.
Right. That is just simple. The law of supply and demand driving the market price higher.
Although there is some shortages on the mercantile exchanges for copper and some base metals and all that, but yeah, supply chain issues for sure, and
but
demand is up there.
But that's not inflation. That isn't inflation.
Yeah, that's right.
So, again, I'm terrified that when I hear people talk about, we need to increase interest rates to suppress demand. Demand isn't the problem in a lot of these circumstances. It's the supply challenge.
Yep, 100%.
That's driving the price higher. So again, I'm a child of the 60s and 70s when interest rates jumped to 21%, and people felt good about themselves if they managed to negotiate a 17% 5-year mortgage at the bank kind of deal.
Yeah, crazy times. I can't imagine.
But as I say, that was inflation. This ain't. I guess is what I'm trying to say.
Last thing I want to ask you. You are the president of one of the leading stock exchanges in North America. What is going to happen to crypto?
So this is a great question. We've obviously been thinking a lot about what our position is, in working with the I'll call it digital assets community. We've done some work. We've actually invested in a custodian that provides for secure custody. Doesn't allow people to loan, commingle, or otherwise, make off with the assets. We're looking at different programs to support the listing or the use of distributed ledger technology to manage securities. We think there's a lot of really interesting developments there that can be applied to the traditional securities industry. Now, I will say that I have been speaking, around the world basically over the last few years. The question always comes up. I guess my cautionary tale is this, the folks that call themselves exchanges, and as I say, this isn't something I'm saying today. I've been saying this from, bored people to death with this, but if somebody calls themselves an exchange and they have customer funds, like you open an account, that's not an exchange. Mm-hmm. They're a broker, under those circumstances.
Yeah, good point.
And, you have to have, and again, I'm not going to get deep into the weeds on this, but there's a lot that needs to change about how the traditional securities market works, right? There are a number of different processes and workflows that are ripe for disruption through new technologies or new approaches.
What's one thing that comes to mind that you think needs to change?
Transfer agency, custody, and the fact that a company has no idea at any given time who their shareholders are because
Mm,
it's kind of behind a blank wall, right?
right.
That's a big thing.
Yeah.
'Cause that could change a lot in terms of how people approach investor relations, proxy solicitation, shareholder communications, the whole nine yards. But
Interesting.
clearing and settlement is a process which has been developed over hundreds of years of stock exchange dealing, both analog and now digital technologies. It works, and it works for a reason. It holds the system up against these sorts of challenges.
Interesting.
And that obviously didn't exist, doesn't exist in the crypto space, and left the folks in those markets vulnerable to exactly the kind of contagion that we're seeing play out.
Now, last question
Mm,
here, Richard.
to
I
say the
want, since
least.
we're talking about crypto, as you know, the Securities and Exchange Commission is now investigating the industry, and the chairman of the Senate Finance Committee, Ron Wyden, is demanding financial information from the top exchanges out there. So, my question is, do you think Canadian regulators will get involved in the same way, or is it your sense that they're kind of sitting back and going to see what happens in Washington and sort of tail the recommendations that they make?
Actually, the Canadian regulators did a wonderful job in Canada because they made the somewhat controversial finding about 2 years ago that said crypto is basically a security. So we are going to regulate these things using the laws that we have, the tools at our disposal. And they sat down with the likes of, well, the operators of the so-called exchanges and said, look, if you're going to do business, in Ontario, you have to be registered. We're
Hmm.
going to regulate you, right? And you have to think about setting up the same sorts of compliance procedures, KYC, anti-money laundering, you name it, that traditional brokers do. And some of them decided to take up the OSC on that offer, and others said, we're out of here. And the principal activity of the regulators has been to make sure that everybody who's trying to transact business with Ontario residents is in fact appropriately regulated. In the US, they never got to that stage because there were basically jurisdictional issues as between the CFTC, which regulates the commodities markets, and the SEC that regulates the securities markets.
Hmm.
And there was a real battle, which the SEC is on the brink of winning because they managed to successfully or persuade a court a couple of weeks back in what would have been, other than the other stuff that's going on, the biggest news in basically in crypto regulation. But a U.S. court has declared that a particular crypto instrument is a security, which gives the regulatory hammer to the SEC.
Mm.
And as I say, their approach would have been to sit down and say, look, you guys are dealing in securities, you're distributing securities, you're trading securities. You need to figure out how you're going to get regulated. Otherwise, cease and desist and depart from the United States of America.
Interesting.
And the one thing we do know is that they have a very, very long arm. So hiding out in various jurisdictions around the world may not be sufficient to protect you from the.
So this isn't like some of these traditional finance guys saying "told you so." This is more about how we need to actually pivot a little bit in the traditional finance side to complement the crypto space, because it's obviously not going anywhere. Yes, it's kind of egg on their face right now for the overall industry, but in a I don't want to get ahead of myself here, but was this needed in the industry for this to happen for long-term growth?
Well, it was going to happen,
Yeah.
given the practices that were taking place, and it's unfortunate.
Yeah, of course.
But it was going to happen, given the the utter lack of regulation that we saw to date. So yeah, absolutely, it should lead to a significantly more secure foundation. But the other thing is that I mean, again, everybody's getting educated. Here that just because you've given your money to an exchange, does that mean it's safe? No. Does that provide any guarantees that the founders won't potentially commingle and use what appear to be otherwise paid up securities for their own whatever, right? Those sorts of things don't happen in traditional finance, at least not legally. There are a lot of safeguards, given the separation between exchanges and brokers and clearing and settlement agencies and custodians and so on, playing their role to basically provide a very, very high level of security for customer assets.
Yeah. I saw the interview with Sam Bankman-Fried with the New York Times this week. Somebody losing, like, what do you say to this person that just lost $5 million, their entire portfolio, and the only thing he could say was sorry? And I'm like,
especially when you use your own
I
money.
hit the...
They actually used or it's alleged that they used money for personal dealings. So it wasn't really safeguarded in a fiduciary way, right?
Oops, sorry. Like, sorry doesn't go far in the business world, that's for sure. But listen, love to talk more. I know you're busy. I appreciate you checking in, and look forward to chasing you around at the next conference, whenever that is.
Absolutely, Shad. Always a pleasure, and thanks again, Ben.
All right, tell the boys they say hi. Thanks, Richard.
Hey everyone, thanks for watching. So what'd you think of the interview? If there's any information that you want to know more of or want to learn about, then provide us with feedback by leaving a comment below. And if you like what we're producing, then feel free to subscribe to our channel, share this video with your network, and as well, click on that bell for all notifications, because we would not be here without you. We appreciate it. Thanks for watching, everyone.